Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Predictions on oil price movement have come in thick and fast. Curiously, prices of oil could swing either way, high, low, depending on how global economic conditions pan out. Take the case of analysts of Bank of America late last month. They gave a couple of ranges. They said oil could touch a peak of $150 per barrel if Europe's sanctions against Russian oil phase in completely over the next few months. Or if a recession hits the global economy, oil prices could recede to $75 per barrel. Unusual for such serious forecasts to give you such a wide range, but it's merely indicative of the huge uncertainties that our world is faced with today. Oil prices galloped to about $130 per barrel range in the March timeframe just after news of Russia's invasion of Ukraine came in. But since then, they've tempered and have hovered in the $110, $120 per barrel range. Last week, they slipped to the $100 range. Why? Fears of a recession. Intriguingly, the best way to predict a recession is to track oil prices. Let's see how. In March this year, data company Data Trek Research in the US put out a note for its clients saying that since 1970, whenever oil price doubled within the space of a year, sure enough, a recession followed 12 to 18 months from then. Who better to tell the world whether it's staring at an economic recession than the International Monetary Fund itself? Last week, Managing Director of the fund, Kristalina Georgieva, said that the outlook for the global economy had darkened significantly since April. She said she could not rule out the possibility of an economic recession next year given the elevated risks. She also said that in the coming weeks, the fund would likely downgrade the estimates for 2022 growth downwards. It's currently at 3.6%. If the downgrade does come, it would be the third this year, and we are only into the seventh month of the year. Quite ominously, she said that 2022 is going to be a tough year, but 2023 may be an even tougher one. So, which parts of the world are in danger of a recession? Earlier this month, Nomura Holdings, a brokerage, indicated that several economies are staring at a recession because of tightening government policy and rising living costs. It says that it is going to be a synchronized growth slowdown. It indicated that countries such as the UK, the Eurozone, Canada, Australia, South Korea were all in danger of slipping into a recession along with the US. The brokerage also pointed out that in a bid to rein in soaring inflation, central banks around the world would likely err on the side of tightening policy too much, even if it sacrifices growth. So, how does India fare amid all this global turmoil? It doesn't look like a recession is imminent in India. Most economic forecasts have not included India in all their gloomy predictions. But a recent Reuters report quoted some economists as saying that the economic conditions we face today were ominously reminiscent of the conditions that the country faced when it got into a slowdown in 2013. Three things stand out for them: inflation at multi-year highs, both the current and fiscal accounts under stress, and third, heavy foreign investor outflows amid global financial conditions that were tightening. So even if India does not slip into a recession, it's unlikely that it would escape the impact of a recession globally. After all, if the EU and the US are challenged because of high interest rates and they are unable to make the purchases as they would want, the first place it would hit us is in India's exports. And signs of this are already evident. A recent newspaper article indicated that high inflation in the US and EU had slowed purchases of cotton yarn, ready-made garments, and leather. This impacted the pace of export growth for India in June. Even though year on year India's exports grew in June, they were slower than in May. And we'll have to remember that exports was a star performer for our country in the year ended March 2022. We exceeded our own target of 400 billion in exports. Top shoemaker Farida Group indicated that clients in the US had become cautious with respect to orders because high interest rates have affected their budgets and orders are slowing. It said even though orders had been growing in the last 2 years, the sector was looking at a 15 to 20% decline now. The information technology services industry, which has contributed in a sparkling manner to overall exports historically for the country, may be seeing muted interest from Western clients this year. According to a report by rating agency CRISIL, the sector may be looking at revenue growth of 12 to 13% this year, compared with about 19% last year. Even this growth is partially fueled by the depreciation of the rupee. After all, for example, if I were to sell a t-shirt and I commanded $1 for it last year, that, if I converted into rupees, gave me 70 rupees. Now the same dollar would give me 79. So that's how I would probably show growth without adding value or volume necessarily. But that's just an example. In the report, CRISIL flagged that companies in the retail, telecom, and manufacturing verticals would tighten IT spending or even maybe defer purchase orders given the high inflationary trends in the US and EU markets, the likes of which have not been seen in the last 2 decades. And we'll have to remember that both US and EU contribute to 85% of the IT sector's revenues in terms of exports. The intriguing part of a global economic recession is that it gives countries like India mild and some temporary relief. After all, when a recession kicks in, demand goes down, prices of commodities, including of oil, would go down, and this helps cool inflation rates. In turn, this helps and allows central banks like the RBI to ease up on their very focused increasing of benchmark rates. That's on the one hand. On the other hand, if our own export prospects are impacted, then our economy and our ability to create jobs are equally impacted. So it clearly looks like this story is set to evolve over the long haul. Stay with us as we bring updates to you. Till the next episode of Business Matters, goodbye from us.